Here are three things you need to know this morning. Stocks are on the back foot as investors digest the Fed signaling maybe two more rate increases this year. The central bank did pause its 15-month-long rate hike campaign, but the dot plot told another story. The committee's rate projections made it clear it is not done tightening, as Chair Jay Powell highlighted persistent inflation and labor market strength. But he also made it clear that those dots are just forecasts. Doesn't mean it's definitely going to happen. Expectations for any cuts this year have been mostly dashed, while investor bets on a July hike now sit at around 70%. Meanwhile, retail sales coming in hotter than expected, rising 0.3% in May. Expectations were for a drop on the month. This follows a 0.4% increase recorded in April. The number adds to the debate over Fed policy and whether or not the economy is cooling down enough to halt the hiking process. The key theme to come out of this earnings season was a more selective consumer, although that's not necessarily reflected in these numbers. The data comes off the heels of this week's CPI reading, which showed headline inflation ticking down, but continued stickiness in the core figure that strips out food and energy. And it is the biggest restaurant IPO since Sweet Green. Cava lists on the New York Stock Exchange this morning, with its stock priced at the higher end of the range at $22 per share. That gives the smart casual food business a valuation of roughly $2.45 billion. Its growth has been rapid, its network of restaurants jumping to 263 from 22 back in 2016. That's partly thanks to acquisition of rival Zoe's Kitchen in 2018 for $300 million. So the question is whether it can justify this lofty valuation and comparisons with the likes of Chipotle. We'll ask CEO Brett Schulman this morning. You don't want to miss that.